Hey guys, what's up? Welcome to a brand new video. In this video we're going to be talking about why you don't have a profitable plan. Let's get into it. Okay, so not having a profitable plan or strategy, going to tackle both of them in this video, comes down to three things. The first one, your plan is not clear enough. Your plan needs to be strict, your plan needs to be clear, everything needs to be worked out in detail. This goes for your strategy, this goes for your risk management plan. Both of these things need to be so clear that you can give it to someone that doesn't trade and he or she does know what to do. So for an example, you say, okay, you take your entry at the fair value gap, put your stops underneath the first swing low that you encounter, and that's your trade. Only these two variables, right? So that's how clear it needs to be. If you're adding variables, okay, liquidity needs to be taken, you need to take out a high, you need to have a change of character, you need to have a break of structure, anything like that, put that in your plan. And why is this so important? This is so important because you can't leave anything to the imagination. You can't leave anything to the coincidence of, okay, this might work now, but it does not work every time, it does not work the next time. Maybe it doesn't work at all after this one winner. Everything needs to be strict. So if you take a loss because of your plan, that is how it's supposed to be. You took the trade that was according to your plan, you still took a loss, okay, that's part of it. You know, this plan, this strategy is giving you a 70/30 win rate, then you know you're going to lose 3 out of the 10 trades. That is just how it goes, guys, and that is just part of the process. You cannot have a strategy that wins 10 out of the 10 trades. If that would exist, everyone would trade that. Okay, some people have 9 out of the 10 win rate, congrats to them, but this is very hard and difficult to do. Even though you have the best strategy and plan in the world, your win rate will not be 90%, I'll guarantee you that. Maybe in good seasons your win rate will be that high, but you will encounter seasons where your win rate will take a dip. So it is not realistic to aim for a 90% win rate. I would say an 80% is even on the high side, but a lot of people are able to achieve it and I can only acknowledge them and look up to them. My win rate sits between 50 and 60%, so for every trade that I win, I lose a trade, but that's okay. My risk to reward is always 1/2 or more, so that's okay. I'm able to lose a trade, I can make that loser back easily when I win the other trade. Okay, and then the second thing, that is literally the opposite of the first one, and that is you overcomplicate your trading plan. And by the way, everything that I'm saying goes for your trading plan as well as your strategy. And I will show my own trading plan in a bit here. But for the people that don't know, your trading plan concludes your strategy, but it also concludes your risk management plan, your time entry stamps, everything like that. It is like the same with productivity. If you have 100 tasks on your productivity list that you need to do today, you will probably finish maybe 1 or 2 or maybe even none. And that is the same with your trading plan. Keep your trading plan that simple that it fits on one page. That's a really good tip. Just keep it so clean that you can memorize it very, very easily. So that when you're in the market, you see, okay, this one is stepped, 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 I can go. If you have to wait for 20 rules that have to be touched, when are you ever going to take a trade? And when is the time coming that you're going to say, okay, F this trading plan, I'm not going to use it anymore, it is too complicated, it is too hard to follow. I'm just going to do my own thing again. What I do is what I feel that is right, which trades I feel like taking, and then you're just starting all over again. So it is utmost important that you keep your trading plan as simple as possible. I will show you mine real quick. First of all, I'll start with my time placement. I only take trades where the opportunity, the point of interest, forms between 9 and 11 AM. That's the London kill zone for me. And I only take trades where the opportunity forms between 2 and 5 PM, the New York kill zone. I want my point of interest to form inside of these kill zones, and this will be the point where I'll be willing to put my limit order in when I see a nice opportunity. If it falls anywhere out of these time zones, I won't be taking it. Okay, then the next thing, the strategy rules. Determine the point of interest on the 4 hour, the 1 hour and the 15 minutes. And by the way, guys, I know a lot of you have bought my playbook and thank you very much for that. And in the playbook, I laid out a lot of different setups that I use in order to trade on a daily basis. But this one is just my go-to strategy. I don't think I have it in my playbook as detailed as it is right now, but I will be making a 2.0 of the playbook, and if you have the 1.0 version, the version that is out right now, you will get that one for free. And in that version, I will include this one, my go-to trading plan that I use right now at this moment. It will also be very much more in depth, and a lot will be more included into that. So if you want me to make that or bring out sometime soon, please let me know in the comments down below, and then I will put some pace behind it. Okay, then the second one is take your trade in the same direction as the overall trend based on the 15-minute and the 1 hour. Guys, this is really important. The 15-minute determines where you are going. If you are in a 15-minute bullish trend and you're taking an entry on the 5-minute or on the 1 minute, please follow that trend. Unless, of course, you are in an opposite point of interest area. Then the next one is look for points where the market already took liquidity or where the market can take liquidity and wait for a confirmation of that. So these are the points in the markets that you will be looking for, because this is the point where opportunities will form. Once you take liquidity, you see price going the other way, you see it forming a lower high, bam, you take that sell, right? You wait for liquidity to be taken, you wait for the market to take out points in the market of interest, and you wait for confirmation that price is going to trade in the way that you want to take it. Then you want to see if there is a strong reaction coming out of the zone, and that is called displacement. If you see that, you know, okay, bulls have entered the market, bears have entered the market. This is a very nice time for me to hop on. And you want to see this at least on the 5-minute, but preferably on the 15-minute even, guys. This displacement must take out a swing low or a swing high, depends on which way you're taking it. You need to wait for a change of character. For the people that don't know what a change of character is and what I mean by that, a change of character is when you make lower highs, lower lows, and suddenly you change from lower highs and lower lows to higher highs and higher lows. When this happens, there has been a change of character. Okay, then you wait for a pullback into your optimal trade entry, your OTE, between the 0.62 and the 70.5 FIB level of your impulse lag. And speaks for itself, I think. Then the next one, align your OTE with a 5-minute fair value gap or lower, and or an order block. Guys, if you have a fair value gap and you have an order block, this is the perfect entry for me. Then we come to a very important one, and that is your risk management rules. By the way, guys, you see this is only one page and it tells me exactly what I need to do. So, risk management rules. Put your stop loss under the wick of the first candle that creates the imbalance zone. It's very simple, right? I'm taking my entry at a fair value gap. I'm putting my stop loss underneath the wick of the candle that creates the fair value gap. Always. No other way. I tried putting it under the swing low, and that also works for me. It is a lot safer. But I also need more pips to get to my take profit. Okay, then there's a very important thing. Where are you going to put your take profit? Is this going to be at a fixed risk rate? So 1/2, 1/3, 1/4, 1/5, whatever you want. Or is this going to be based on structure in the market? So right now, I'm always looking for that 1/2. That is my standard, so it's not included in the plan because I've never traded any other way. I take my profit at the first significant swing high or low that I encounter, based on which side I'm trading on. And this must be a 1/2 at minimum. But you can also say, okay, I want to play it more safe, and when I take some losses, I like to do this, and then I just take a fixed risk rate of 1/2. Then position management rules. Only scale in once all rules are also matched on the new trade, except the liquidity taken. Because if the liquidity has been taken before, it doesn't need to be taken again before you can continue your trend. When you're scaling in, you want to search for a continuation trade. You want to search for a pullback inside of your leg that you created when you're already going down. You want to see a pullback forming, and then you want to trade that pullback. But the pullback needs to align. It needs to be at 9-11 AM or 2 to 5. Your point of interest needs to align. You need to take the same direction of the overall trend, of course. There needs to be a reaction out of that. Everything needs to align the same as the first trade. Then only move your stop loss to break even when price created a significant structure or broke significant structure. So whenever you're breaking a low, whenever you're breaking a high, put your stop loss to break even. That's what I'm doing. And by the way, not when that high is only 5 pips away from your entry. Now when price has gone a significant way already, then you move your stop loss to break even once you have broken your high or your low. Or when you make your pullback and you broke your highs again, that's also when you can put your stop loss to break even, because you know this new low that has been formed will protect your stop loss. Then my account management rules. This is for my funded account. Only risk 1% on standard trades, risk 2% on aggressive or A+ trades. By the way, I also only do this when I'm in the plus, when I'm break even or higher. And risk 0.5% when the account is in 3% or more and drawdown. So normally I always risk 1%, but on A+ trades I risk more, and when in drawdown I risk less. So guys, then the third thing that can hold you back from creating a profitable trading plan is that you don't hold yourself accountable to it. You make up this great trading plan. You have everything that you want in this. You have your time placement, you have your strategy rules, you have your risk management rules, your position management rules, your account management rules, Everything is in there that needs to be in there, but you don't follow it. Why in the hell did you create it in the first place if you are not going to follow it? Guys, I want this to be very clear, and I want you guys to remember this. If you remember anything of my channel, remember this. Discipline is everything. Discipline is so important. Why didn't you log all of your trades that you were trading last week or last month? Because you were tired? Because you lost some trades? Come on, man. Do you think people on Wall Street, when you think about a trader, right? You're thinking about Wall Street, you're thinking about Lamborghinis, you're thinking about everything. The big picture. Do you think they don't care to log their trades because they're tired? Do you think they don't care to follow their plan because they're tired or they don't feel like it? If you want to be a trader, you have to act like a trader. You can't act like the schoolboy that does this for his hobby. You need to be serious about this. You need to be so serious about this because this can change your life. If you imagine this, if you dedicate like 5 years to this, 5 years to this game, every university, college, degree, everything takes 5 years. So also dedicate 5 years to trading. 5 years, let's say 2 hours a day. 2 hours a day are 700 something hours a year, are 3,500 hours over 5 years. And that's only if you're doing it 2 hours a day. Can't you see yourself being successful after so many hours put in? Focused hours put in, and just being disciplined to what you tell yourself to do, being disciplined to learning, to studying, to backtesting, to following your trading plan, to logging your trades, to journal everything that you do, to write in your journal book. Do everything that has been told you to do. Damn, this was a rant that I needed to get out of my head. Because this is something that I needed to hear. Even last year, this is something that I needed to hear. And I think this is something that a lot of you also need to hear. So guys, be disciplined. Stick to your trading plan. I'm not saying this for myself. I'm saying this for all of you. Stick to your trading plan that you're making and try it for at least 3 months. If it's not working, change it and change your strategy maybe, or try something else. But give it some time to work and give yourself some time to work with your trading plan. Because you're not going to ace this from day one, of course not. Your trading plan takes time, your trading plan may change over time, but never let the core value disappear and always stick to it. Guys, if you enjoyed this video, don't forget to leave a like down below. Don't forget to subscribe if you're new to the channel. If you have any questions, comments, leave it in the comments down below. And I will see you in the next one. Bye bye guys.